And I love the title of your of your bill, the sound dollar. That's something I think is so important. But it seems to get a sound dollar, we need to have something we can define. Do you have a definition in order to give us an idea what our goals are? Divorced maybe from the policy, how do we define the unit of account? Because it was precisely defined for a good many years. Matter of fact, up until 1971, in a relative way, it was always had a precise definition. So do you have in your own mind a definition for a sound dollar?
Well, I do. In my mind, we didn't include it in the legislation. Right now, the Fed has identified a 2% explicit inflation target, which seems reasonable over time. But truth of the matter is we want a rules-based inflation targeting. We want the Fed to stop the go-stop policies, the interventionist policies, and to focus on staying within the lines, both inflation and deflation. Your point, that is the strongest foundation for economic growth. Mr. Frank likes to point out that this is an either-or. It's not. The Fed does not do and cannot do a good job at job creation, as the chairman and their members agree. But over time, in fact, preserving the purchasing power of the dollar does create the strongest economy for the U.S., or at least the opportunity for it, strongest job creation. So no, there's not an explicit target in the bill itself.
So in a way, you define the dollar by achieving a price level or price stability.
We don't choose a strong dollar or a weak dollar, a sound one.
Because there are many free market economists who don't concentrate on that, and they, matter of fact, want a flexible pricing level, not a fixed pricing level. For instance, how would this have been interpreted, or how would the monetary policy been altered, say, in the 1920s? Because a lot of people said, there was no inflation because prices were stable, relatively stable, because productivity goes up. So if prices are relatively stable and due to productivity, but then there still are distortions in the market, say in the stock market, that of course led to the 1930s. Can't you be deceived if you concentrate, on prices rather than looking at the total picture of the malinvestment? I know you did mention about not monetizing debt, but so how would you adjust for the fact that the price level doesn't give you the information? Because even today, a lot of prices, in spite of the monetary inflation, some prices are going down, like in electronics. At the same time, the price of an education, the cost of education skyrocket. So how would you adjust for that?
Thank you. One, I've long ago learned never discuss Fed history with you, Dr. Paul, since you're as knowledgeable as anyone on the planet that way. But looking a little closer in history, the last 40 years, what we saw in the 1970s, a great lesson. We were told we couldn't have a high unemployment and high inflation at the same time. Couldn't happen. As we know, not only did it, but the Fed's intervention, go, stop, actually created very volatile economy with very deep and frequent recessions. When the Fed focused back on a single mandate of price stability in 1979, that changed. And for almost 20 years, we had not only strong economic growth, but we had a very short, very shallow recession. So we saw the benefits of that focus on price stability. In the 2000s, we saw the Fed keep interest rates too low for too long. It helped inflate a credit-fueled housing bubble, and helped create a global financial crisis. And to sort of wrap that up to your immediate question, within the Sound Dollar Act, not only do we focus on rules-based inflation targeting, but we require the Fed to monitor and report back on these potential asset bubbles, to monitor the price of gold, other commodities, equities, bonds, commercial real estate, agriculture, real estate, industrial real estate as well. And we don't force them to act on that, because that circumstance will vary. But we want to ensure, to your point, that not just the price indexes of goods and services, but those potential asset bubbles not only be monitored, but reported to you and I and to the public as well.
I have a question for Mr. Frank, but I'm out of time, but I think there's going to be a second round, so hopefully I can get my question asked. I now yield to Mr. Gray.
Thank you so much.